Good morning, everybody. Welcome to the Flow Show, Friday, 24th of May. We've done another week. Oh, we'll nearly be halfway through the year at this rate. Time passes by when you're having fun. Morning, Kate.
Good morning, Ryan. Good morning, everybody. Are we Friday then? Official? Official? Is it official? Yeah.
I hope so. I'm going to be. I'll cry if it's still Thursday. Yeah, Friday is. Here we are, nearly the weekend. Right, let's get stuck into it. Lots to talk about today, as always. We heard from Bank of Japan's Ueda over at the G7 shindig in Italy. Our man Magix is on the floor there. I would say on the ground, but he likes drink, so he's probably on the floor over there. He's keeping tabs on what's going on in his home nation. Anyway, Ueda says there's no change to the view on Japan's economic outlook despite the negative Q1 GDP growth. Said that GDP contraction was due in large part to a drop in auto production and the impact on consumption and exports. So as we mentioned when that data dropped, it's already been looked through special circumstances there. Toyota is the auto production firm that had issues with production there, halting production on a lot of their lines. So that's the excuse they're given for that. Then he said there's much of the focus is on the likelihood of a US soft landing. So all eyes pointing, well, east or west, depends which way you want to gaze around the globe. But he's, as I said, looking through that data, which is going to place a lot of importance on the data from now on coming into the new financial year. On the data front, we had the national CPI numbers dropping overnight, and as expected, they all fell back. The core inflation number was expected at 2.2 from 2.6. We saw headline or one of the other cores and CPIs coming in lower as well, 2.5% from 2.7%. There was another core, the fresh food and energy core, which came in at 2.4 as expected versus 2.9% previously. So confirming that drop in April numbers. And if the May PMIs and things like that are to be believed, we may be heading for a bit of a soft one in May as well, when we get the May data starting to roll out over the next few weeks. So we're going to need, as I said, to see this pick up in the economy in the new fiscal year, which is going to put some heavy pressure on future rate hikes. Reuters have been speaking to economists, and they say that the BOJ will decide on its bond purchase reduction by the end of July. I think they will start tapering the size of bond buying by the end of July, according to nearly 2/3 of economists that were polled. Close to 90% of those forecast an interest rate hike to at least 0.2% by the end of the year. Data's going to have to go some, but economists thinking only 20 pips of hikes will be coming by the end of the year, so going likely in 10 pip increments. What are your thoughts on that, Kay?
That seems on the low end. But the problem is that we've seen those bond buying overnight, and they didn't see too many candidates, and that is not really. If they would be buying bonds and everybody thinks that the yields are going to go much higher, they should get filled like no tomorrow, right? But I fear that the market is already in the position, and the Japanese whales haven't said much of late, but we know that they are waiting somewhere in the woodwork to come out and start to buy JGBs again. It all looks like we're back to slow and steady, at least for now. Ueda was extremely diplomatic yesterday. Probably a bit too early in the day to have drinks and do a Corona style thing, but yeah, I mean, you know what? I still think I still don't completely rule out a June move on the yields. And I was looking at the short end when with those people expecting those yields to go up to 0.2. They are now, the 2-year is at 0.33, something like that. And so that would mean that it's already overshooting what the major expectations are, which is not a great sign, right? Because if we are right, or well, if they are right, if the the Bank of Japan will reduce their bond buying, and but in the meantime yields are failing to go higher, we may already need a bit of repricing to the downside if those people are right and only seeing it to 0.2%. I think it's a little under what I would like to think. It's a little under what is really going to happen, but yeah, we will see. If they do 0.10 somewhere, that is really going to cement the very slow and very steady. We know that the Bank of Japan is closely working with the government not to let government finances derail either. But still, I thought that they would use this window to go just that little bit faster. But yeah, Ueda is not hinting at it, at least not with his yesterday's comments.
Yeah, I'm just trying to recall if he actually said previously about the size of rate hikes. You know, they haven't ruled out the size of them. Could go 25s.
No,
I think I recall a comment. I'm just pulling it from my mind. I could be completely wrong. That he said that
never said anything about the number of BPs they may hike with. I don't remember it anyway.
No, I just remember it. I'll have to look it up, but it might be something like he was saying that you know, they're not ruling out any size of rate hike.
Okay.
It was something like that. I'll have to look it up. It's probably historical. I'm just having a quick flick through my notes and can't.
0.10 would be low. I mean, they could do perhaps like a 0.15 or, well, 0.2 is perhaps already a big expectation for Japan, but yeah, 0.10 if that is, and then saying like, okay, we are doing it just because of the level of the yen, assuming that it would come in June because the yen is so weak, that's not going to be impressing anyone in the market.
Yeah, exactly. Anyway, no, I can't see anything. Just going back over some old notes. Now I need to get all the way back to the beginning. Boom, boom, boom. Excuse the clicking. Right. So anyway, moving on from that. So yeah, we got the market looking at the potential for 10 pip hikes by the end of the year. We need to see whether that's borne out or not. Over at the RBNZ, Assistant Governor Silk said the RBNZ is concerned about near-term upside inflation risks and that the bank is prepared to raise rates if needed. Deputy Governor Hawkesby said cutting interest rates is not part of the near-term discussion. So they're keeping a very hawkish stance and continuing to push that message since the RBNZ meeting earlier this week. Good news for us all. I did a little jig when I heard this one. The Bank of England has cancelled all public speeches and events by officials until after the July 4th election. Oh, how I cheered. So we won't be hearing from the BOE chapter and verse daily, weekly, whatever. No squeaking from Bailey at all. So I'm looking forward to the peace and quiet of that one because there's going to be enough noise from the election. The 20th June BOE meeting will go ahead as normal. So no change to that. Monetary policy is still monetary policy. And just to give you an update, not that it's hugely important, but once Parliament is dissolved, there'll be no parliamentary business conducted. So PMQs will be out. Any passing of bills will be out, although there's a bit of a rush on at the moment. Any important bills that are in the pipeline, both Labour and the Conservatives are having a discussion about which ones they want to quickly rush through before Parliament gets dissolved 30th of May. So, but anyway, things will, for the BOE, will all be largely in shutdown, thankfully. On to the data front, and we had a soggy batch of retail sales from the UK. April numbers all coming in, big fat red numbers there. Not a real surprise. I can't remember if it was here Monday or Face or wherever. I did say that it's probably likely that they're coming crap, and it'll probably come in crap due to the weather, because April was horrendous. And that is actually being the official line from the ONS that weather impacted sales there. I'm not sure whether they're going to improve in May. Did see a bit of sunshine, but we also got a couple of bank holidays. So that was a pretty steep fall. So we might see a bit of a pickup next month when we get this month's numbers. So that's a bit of forward guidance on that one. The basketball player, SMB's Jordan,
Ryan
was out with, yeah.
Yeah, before you move on, I want to come back on this BOE stuff to go silent over this election period, and then now we have seen those data yesterday, PMI and stuff. Do you think there's a possibility that Bank of England takes whatever is happening right now, and then with the upcoming election, takes it as an excuse to go in June to avoid traffic jam once the elections are done in August, for instance? Do you think that all of this can accelerate their decision to cut?
I don't know. I was gonna talk about it in a moment, but yeah, it's. I think it's twofold. Okay. If they go in June, they've got to communicate that, and if they're not allowed to speak, and it's not a monetary policy meeting, there'll be no press conference, so it'll just be in the minutes and the statement. There is no opportunity for them to hit the press afterwards. You know, Laia Bailey likes to come out and do his little
Not
press
even
round.
Bailey?
No, I don't believe so. They can't. I don't know. Obviously, if something happens, if there was a shock or financial stability event, then obviously they can come out on the wires and talk about it and do whatever. I'll have to check the press release from the BOE. I think it's things like speeches and whatnot. I don't know if press rounds are discounted, or whether they're allowed to speak after the BOE meeting. But I don't think the election would be a trigger to cut.
No, of course not. No, but I say just the combination of, but not specifically the election, but the timing of it, because you do it in July, and then I know they have the time until what is it? Well, actually, first of August is their next is their meeting right afterwards, and that's with projections and the whole lot. But I was just wondering, and I wanted to pick your brains on that, whether it may be a trigger for them to go early to avoid all the mess after, and a potential mess after the election. You know?
Yeah, I think it'll be a communications thing. If they can speak in the press afterwards, then it's a possibility. But the other side of the conversation is, and this is what I'm going to talk about, that the more stuff I'm seeing, the more it's pushing me towards a June cut anyway. You know, we've had this reaction after the PMIs. You know, the pound is still fairly well bid. We've had half the market move into August for their expectations for a cut. Morgan Stanley were the latest lot to move that way as well. But everything I'm seeing in the data, in sentiment, you know, the PMIs and whatnot, is potentially pointing to reasons why they might go in June. So I think the market is swinging a bit far the other way. So irrespective of the election, I think there's a stronger risk that they go in June than not.
I agree.
And that's going to be something to keep an eye on, because, as I said, all the market and the banks are leaning the other way, and they're pushing through to August. So the one thing that came up today, and I popped it in our chat room, I'll just show that quickly, is the FT piece showing that this energy price cap, and this was one of the reasons why we saw inflation dropping this year, dropping this month in the last report, was due to the energy price cap. Now that's set to come down another 7% in July, which makes that show up in the August inflation data, or August when we get the July numbers. So that's another potential big drop for inflation in the latter part of the year. Now the BOE will look at this now. They'll be factoring this in now, because we've got inflation at 2.3%. Yeah, the core is still a bit sticky, 3.9%. So we've got another inflation report the day before the June BOE. If that puts inflation at 2% or even under, and then we've got this to come on top, that may force their hand in June, because they will want to be ahead of steep drop in inflation. So as I've said here, if it comes in even less in August, then that's going to be less than 2% in August. That's going to be pushing for more cuts as well. So June for me is growing actually as the month when they can cut and give guidance potentially for how fast cuts come thereafter. We could get a quick June-August cut if they think this inflation is going to have headline inflation well under 2%. As I say, it could be under 2% by the time we get to the next number, 19th of June, and they will factor that in, and then the future. So I think the banks they're all going the wrong way at the wrong time, which won't be the first time they've done that.
No, that's true, and I agree. And has to be said that for once, and that's a very strong admission from my side, because I don't like him at all. But Bailey and Ramsden seem to be right, and they seem to start to get what they were looking for, and calling for it ahead of the news for once.
Yeah, exactly. So
and I think they are dying to cut.
Well, yeah,
they're desperate to cut.
Yeah, they're desperate to cut. So anything that gives them that. Yes, there are still factors that will stop them cutting. Services inflation is still high. That core is still high. Wages are still high. There's still a lot of factors that will put them on hold, or they could go on hold for. But as we've been saying, they are desperate to cut. So anything that potentially puts them in that side, and inflation dropping below 2% will be one of those things. Yeah, I think the market may be a little wrong on this one. What it means for the pound and whether we get a big reaction is another question, because we're still really only trading the calendar, not whether they cut at all. So,
there's
what have we seen?
Different reactions, I think.
Yeah, what have we seen this week? The market shifted from June to August, and all we've seen is a 30, 40 pip drop in euro sterling. That's not a huge move, and cable's still well bid around 127.
I think euro sterling may not be even your best instrument. If ECB goes in June and they go in June as well, we might see a knee-jerk reaction, but it's perhaps not your best sterling to trade either. And actually, you may see a bit of a drop when the Bank of England goes early and everybody panicky and all that. But well, then the elections will be afterwards. There's going to be another hurdle to overcome. But I'm actually thinking, if they go early and you still see pretty decent wages, and stuff like PMIs also, like yesterday, holding above 50, you may see actually an inverse effect.
Yeah, well, I think it's
because a rate cut can be stimulative for an economy,
Yeah, it's weird because it all depends on how. There's always several things you got to look at, and how the market is leaning going into it, and then what it means for the wider picture. Yeah, for the wider picture, it should be supportive, and that's pound positive. But for the short term, because the market's looking a little bit less dovish, I think there would be an initial reaction. I'm talking maybe euro sterling up to 85, 70. I'm not talking 87s, 88s or anything like that. But just going back into the range that we've seen. So that'll be an initial reaction, shall we say?
Yeah, I think the bigger impact may be on the cable again, because the Fed is going to be much later then. Then the market is going to get the confirmation that the Fed is going to be the last one of the majors.
Yeah, very much so. But
Yeah.
again, cable's
Anyway,
looking very strong. So would that be a dip buy again? I don't know. That's the thing. I can't plan how to trade cable in June when I don't know how to trade it in the next 5 minutes at the moment. So we could next week the dollar could be rampant and we're trading at 125 again. Who knows? But that's the luxury that us retail traders have. We're not banks. We don't have to make forecasts for selling something. We only make it for what we think the market's going to do and base our trading on. So my base case has always been August for the BOE, but the evidence that I'm seeing now is raising the case for June, and all I'm looking for is how to trade that in the quid. So we shall see. I'm long US sterling, and I'm happy with it at the moment.
Yeah, keep an eye on what the guilds are doing. I say it's always the bond market who is going to be the big driver for stuff, and especially to create rate divergences and things. If you start to see big, you see for the time being nobody reacts to it, right? Because the yields are ticking higher. It's still one big pot of that bond market globally between the majors. But keep an eye on that. If the market starts to all of a sudden say like, oh, June could be possible. Those things should turn a little bit. Yields should turn a little bit. The cable could come under a bit of pressure and things like that. That's all part and parcel of the repricing. But those guys will be our drivers, I think, for as long as they don't react. Your FX market with the vols that we are seeing now is likely not going to react too much either.
Yeah, exactly. Just looking at the vols this morning, euro dollar in danger of falling below 5%, currently at 5.13 in the 1 month at the monies. Under 6 is getting quiet. Under 5 is getting definitely quiet. So yeah, let's hope that vol picks up. Right, let's crack on with the rest of the bits and bobs. Did I say about Jordan or did I start? I can't remember.
Yeah, anyway. You said something about Jordan. Yeah.
Yeah. Okay. Right. We'll move on to Mr. Villeroy then at the ECB, who said he's very probably going to cut rates at the June meeting, which we all know June is nailed on. We'll be trading what happens after. Back to the data, yesterday's data. No one's bothered about jobless claims anymore. They came in round about the numbers we've previously been seeing, down 5K over expectations, down 8K on last time. The continuing claims still ticking along under 1.8 million. So no worries there. Would have been interesting if we had got a little wobbly number just to see if the market was still watching it, but nothing to see here. Then we got some good numbers from the PMIs in the US. Manufacturing pushing a bit further into expansion, only by 9 pips, but some were expecting that to drop 1 pip into contraction, so positive there. Services as well, a nice decent beat. Keeps a soft landing mood in play. This one had been heading lower a little bit, so that was a nice boost to that one as well. So all going well in the US. That's got the dollar a little bit bid as well. New home sales after that came in a little bit softer, but people can jump on this and say it's a weak number, but what we like to look at, as you know, is the trend. And when you just knock up the chart of that, you can see there is no real trend. We're pooling along in this area. So unless we start trending one way or another, nothing to see here on that front as well. The house prices were up 3.9% over last month, but down 1.9% from March last year. It's a little bit softer than last year, but still, again, no red flags for that one. Fed's Bostic says he's not going to talk about moving the inflation goal until we get to 2%, which echoes my thoughts as well. A lot of discussion it comes around now and again. It'll pick up as inflation comes down and the Fed start cutting. The discussion on whether they will move to more of a range or raise their inflation target or go to something that's a bit looser than pinning it on one number. And as I've been saying, they will not do that. They will not move the goalpost now. They'll do it once they get to target, if they get to target. Right, on the pricing front, as I said, Morgan Stanley were the latest to boot their June call out to August for the BOE. Rates traders have priced out any chance of a BOE rate cut in June. And as we just had the conversation, that's music to our ears if you want to trade it, because now there is a higher risk of the price moving if they do cut in June. And if that continues to grow, that's I'm going to be looking to try and take advantage of that. Barclays were one of the BOE booters from June to August. They're now weighing in on the ECB. They continue to expect 25 pips of cuts at each forecast meeting. That's June, Sep and Dec, but no longer expect a cut at the July meeting. They continue to expect 150 pips of cuts in the cycle. Goldman were talking about the RBA, and they say the market pricing for RBA rate cuts is too shallow. So we'll see what happens with those lots over there in Aussie land. Double Line CEO Gundlach says that a US recession is likely this year already, and they have more treasuries now in their strategies than they've ever had. Although he doesn't like 30-year treasuries because people could get spooked by the deficit in the next few years. At this juncture, he would never invest in China as a US investor. Now, I don't often talk about some of the financial firms and their wafflings, but this gives you a bit of an idea of how some of them are leaning. Particularly interesting, the comment on China. You know, there's been a big pull out of China. This is one of the problems they face at the moment. It's all fine getting their domestic economy back on the frying pan or back on the stove, but it's the international relations that they need to work on. And as you can see from that comment, there's little appetite to get back into China by investors. And I think that's probably the bigger news out of all those comments there. And we've had a couple of pieces dropping on social media that Putin is talking about him wanting a ceasefire, but that ceasefire to be based upon current lines. So all the ground he's taken in Ukraine, he wants a ceasefire and go to peace talks with those lines taken into consideration, i.e. we want those parts that he's won to become Russia. That I don't think is going to fly. So that although we've got these Putin wants peace talks, what he's after, I don't think he's going to wash with Ukraine or anyone else. But just keep an eye on risk trades if you see those headlines pinging about. Anything else for anything else, Kate?
Well, just on that bit, they seem to have started to take away border signs with Estonia. So for those who want to see a more peaceful picture on the geopolitics, it's apparently not for this weekend yet. Also, I think there's a bit of an issue with China going on because they are upping their drills around Taiwan. Nobody's going to like that, of course. And again, and I think that also has the international investor community still worried about investing in China. Yeah, they can do stuff locally. They can prop up their builders or whatever internal affairs, but I think the international investor community is not yet ready on a geopolitical basis to reinvest in China. Also, when we saw the Xi traveling to Europe, it didn't grant any results at all, right? Yeah, we heard again from some countries saying that they cannot they can disinvest but not decouple completely from China, but he hasn't won anyone over really to go deeper and see with them, although the Germans were like pretty close on doing it. But yeah, for the rest, no, I think you covered everything, Ryan. Again, I think we can move on.
Yeah, cool. And yeah, Xi didn't do anything in Europe, but then he jumped on a plane quick enough to fly over to Iran for the funeral of the president there, which again piss off a few people in the West. But anyway, that's the That's a geopolitical game being played. Right, where shall we start? Let's start with dollar yen, glued to 157, probably in as we've not got a lot of vol today, in big part because we've got a big expiry there in the options, over 3 billion going off at the big figure today. So not a shock to see that circling that number at the moment. Yeah, I think maybe with these China drills and everything going on, maybe there's a chance we see a bit of risk off coming in, or the market taking risk off the table into the weekend, just in case someone slips their finger on the wrong button or something. So just keep an eye on that, I think, for later on today. I'm still not that keen on trading this one at the moment. For me, the balance of risks is for it to keep going higher, especially if we are going to get softer inflation data next month. That will certainly put the BOJ to the test once more. Have they missed their window, or will they be missing their window to get rates up again? Euro sterling still hovering down around here. Still not looking too great. We're obviously coming off the 85 number. We're holding a bit of support. So we've got similar price action that we've seen before. We have a low and then we bounce and then we find a bit of support. I want to see us getting above this 1520 area and holding above that 1520 area. That'll give me a bit more confidence that we're going to start to unwind some of this move. But on the upside, need to get above this 35 area. So as you can see, with 20s, it's all a bit sticky off these little lows. So I want to get it back above 35, and then we'll see if we can get it back above 50. I've already started taking a bit off yesterday up into this 26, 27s, but I want to see it above there. Get above there, I'll have a bit more confidence that maybe we've got another hold down here. But if not, then we could be digging in for quite some time on that one, those of us who are still long on this one. Cable keeps holding up here. It's not giving up much, but it's not making any headway. So I think we're going to be on the clock for this one. If we can't get a break up higher, it's likely we're going to see a steeper pullback because people just run out of patience. A bit similar to what we saw in Aussie dollar. Similar price action above this area, and then we break down there, come back up. We had a little go, and then wallop, we're down again. So I think cable's getting into that situation as well. But the pound is a bit more bid, but how long that'll last, I don't know. So just be wary if you're going long in the quid. Watch out if we do get, particularly if we break that new low. Below there, we could be 126 pretty quickly, maybe even a bit more, just to tickle those stops down at the big figure down below. Not much else going on. I got stopped out of my dollar MEX shorts. We got up 16.75. That was as much as I wanted to give it. Now we're just sort of holding, or we might be holding above this zone. So if we do that, then that's going to probably favour a bit more upside. So this one's gone a bit more neutral for me now while we mess around with what's going on with this one. Did manage to get a bit of profit on it, but I gave a chunk back as well on my stop. So not quite the move I wanted, but that's trading for you. Keep an eye on dollar China as well, because again, we're just creeping up again. We've been up here before, up towards 728s. And I just think maybe some of this news is starting to weigh again, all this stuff going around with China. So I'll be keeping a close eye on this one. If we break up 728s, then we might be heading back up towards these highs here. I'll think about what I want to do with my long-held shorts. It's becoming a bit of a pension trade at the moment, let alone a normal trade. Let's have a look. All a bit quiet in the comments today, boys and girls. Let's get your comments coming in. Anything you want to look at. Not an awful lot going on at the moment, though we do have some moves. Dollar CAD's is motoring on, which is looking pretty good. I'm actually gutted because I got stopped out overnight the other day. You know, I didn't realise it until I got in about 2 hours into the day. I was like, oh, where's my dollar CAD? Oh, I've been stopped out. So by pip as well to make it more annoying, and this one's just gone on. But yeah, could be we getting a move up to the high 137s. It does look a bit slow and half-hearted at the moment, though. So we'll see what goes on here. What we got coming out today in the data?
Retail sales.
Retail sales. Ooh.
But I mean, they're always a bit backward looking, right? Because we're already end of May and it's March numbers.
Yeah. So
okay. We'll
retail sales? No, that was last Canadian retail sales. Sorry.
Canadian, yeah. But you were on the CAD, right?
Yeah. And
okay, that's why I was saying the retail sales.
Yeah, no, I was thinking dollar, but we got durable goods from the dollar, so there's a bit there's double bubble for
maybe
the loonie on that front.
Yeah, and, maybe the durables will make it move for once, but it has not been a mover for quite a while.
No, exactly. And then we got Michigan a bit later after that, and we'll keep an eye on those inflation numbers, which were pretty hot. So keep an eye on that one. But yeah, for the loonie, could be a bit of a move. I might look on the other side if we do get a move up to 138. You know, we've had a couple of attempts up there that held. If I can't be long, then I'll maybe try and be short at the top of the range. Kay, handing it over to you, mate.
Alrighty.
Where are we? There we go. Lost it. There.
Okay. Well, I'm on the euro dollar, but I don't even know why, to be honest. It is just in a range, right? The only thing which is interesting here is that we are holding, sorry, the 108 level. It's really 108, 109 right now. And as we were already talking about those FX vols on the option side being so suppressed now, it's no surprise to see that we are just mooching around in a range. Those option players, they will be sitting on each side of the range and just keep it in there unless we have data really taking the ranges apart, and then we will probably trade something fresh. But for now, just observe this range. That's what I'm doing as well. There's a bit of resistance around 108.60 as we've seen of late. The highs are coming off just a tad, but really, I mean, it's just clutching at a few straws here inside the range. If it would go up to 108.60 again, look at what the reaction will be there. If the data don't give us too much, it could top out around there again on the back of those option traders who are probably having boatloads to do now. Sorry, on each side of the range. And also, I would like to say that I have the firm impression. Let's put it that way, that real money who really are responsible for breaking ranges. We can do whatever we like on the retail front, but we are at best 5, 7, 8% of a market. But the real money is not really getting involved in all things majors right now, apart from the yen, perhaps, where people apparently still continue to sell yen regularly. But so that's also one of the reasons why those vols are suppressed, why people are trading ranges, why everything looks to be going one way and then all of a sudden reverses. That's exactly the reason why. We need people who make the market move to come into the market and give those bigger flows that break ranges, right? So yes, the CAD. I'm a little long dollar CAD, and I also did buy a 137.5 call covering the Bank of Canada, and we are making a bit of headway in the short term. We've broken above this 136.8590. We confirmed through 137.5, although the dollar is giving back a little bit of its gains right now. So on the back of the US and Canadian data this afternoon, we could see a retest here of 137. Why not even 136.85, and then see what happens. But we have stopped on the next resistance, which is in the 137.40s. I'd say respect that for now, and wait for what's to happen to confirm this break. Really, we need to get a close above 137.40, 45, I guess. Ideally above the prior high here, 137.55, 60, and then I think we could be off to the races for some more gains. But again, if you look at how these markets are trading, perhaps the more interesting one right now is that we were trying to break this Euro CAD higher. It took a while. It took a bit of trying and error. We had this French PMI sending in a little lower first thing yesterday, but then we started to push higher again once the Germans came out, and then of course on a bit of weaker Canadian data as well. And this looks now positive to me for a bit of a push, which could take us up into the perhaps into the 149s. Sorry, this looks a little healthier on the cross side, and yeah, for as long as I say, for as long as we hold just below 148, this looks a bit better. I'm just looking at the comments in the meantime. Canon Black, Canon, hi. Kiwi Yen, and then Michael Weissman is asking about gold. Okay, let me take it in reverse order. Gold. Where do you see the level? 2341, 61.8. 61.8 of this move. Is that the one that you're looking at? Let's see. Yeah. Oh, no. Yes? No. Yes, it is the one. Okay. Yeah, that's one. But remember when when we were on the way up, I said like there's this big traffic zone here in the call it 2315 to 30 zone. It looks as if, and I'm going to zoom in a little bit. And look where we stopped, right? We stopped there on the 23 and a quarter, and I think this zone here may have a bit of a say to close the week. And then, of course, this bigger one, the bigger channel that we broke, we knocked our head against it, came back a little bit, then we broke heavily, came to retest, and then we did the last leg higher. I think this trend line here is one that we should respect, I'd say, and that's just below 23 bucks. And then we also have a bit of a level here around 23 bucks, the round number. So this 22.90, 23, I think is going to be paramount for a hold if this is to continue. Okay, if we start to break below this 22.90 and then you confirm under this 22.80 prior low, then the party may be completely over. So those are the levels that I'm watching. I see your 23.44, but since it's okay, it's the month's move. I agree, but to me, it's not really important enough. Looking at the speed that we've gone through it, you know, I'd rather keep my own levels here right now. But yeah, I see the level. Okay, silver coming back to and below this famous long-term 50%, but we are holding the 30 handle. So 30 figure 10 is going to be where we are going to monitor it for the close of the week. I'd say this is the level that you look at. We can see more. We can see more washout. That's going to depend on what's happening, I think, as well in the equity market. And we are on that 52. We are on that 52.80 right now. Okay, so this 52.80 is a bit of a level here. I think it's going to be relatively important whether we close the week above or below. There's been a big round of take profit going in there. I think looks like a little bit like people are just jumping into what is it, Nvidia and a few others, and then selling all the rest. That's how the picture looked yesterday on the S&P. But we are turning right around there. So this is one. I think if we start to break yesterday's low below 52.60, that we may have another round, perhaps down to low 52s. That is possible, okay? But if we close the week above, then this will have been just a blip, I would say, okay? If we close the week above, and then we'll see what happens next week. But if we close above, this is just a setback, as we have seen many in the past. What is Ali saying? Oh no, Kiwi Yen for Canon. Kiwi Yen, my friend, I have not really updated my picture of late, but as we can see, we are well above those long-term highs. Let me go on a shorter time frame. Kiwi Yen, Kiwi Yen, Kiwi Yen. What do we see here? This one here. Oh, it's already well above. I mean, this looks. I mean, I don't know what you want to do, what you want to do with it, but this doesn't look like one. None of those yen crosses, by the way. This still doesn't look like one where I want to stand in front of. This could trade up into the mid 96s. Why not 97s? You know, we've broken and well broken out of this whole channel here. That was around 94.75, and we never looked back really, right? So this still looks very big to me. Only if we start to get back below 94.90, that's going to be your first danger level. To be really honest, and fair, and I've been repeating that so many times already now. I think if one plays long yen in a way, you're just playing interventions. So longer term people, they still will be very, very comfortable with everything that's going on in those yen pairs, you know. So I don't know exactly what you want to do with it, but this still doesn't look like one where I want to stand in front of, you know. I think, well, it all depends on the dollar, and dollar is a bit on the defensive right now, as I said. But the dollar may get a bit interesting in this one, if we get there, of course. 157 up to 158. This is an interesting zone to watch because it is the top after the last intervention, from where we came back down then again in a second round. And we are slowly on the approach again. So watch out what's happening there. If we get through that yesterday low here, 156.5, that may set in a bit of a bigger take profit wave, perhaps, but it's really only going to be take profits, you know. You're short euro sterling, okay. You don't trust cable weakness, all right. Yeah, you're targeting 85, that figure. Yeah, I mean, that's where it all happens, you know. But if it, as we have been saying, if it goes long, if it goes above 85, 30, 35, I don't think, and Ryan is agreeing with that. I don't think that's going to be a good trade to have. But let's see. I mean, it's extremely stable. Huh? Cable is not going anywhere. I mean, euro sterling for the moment is not going anywhere. Your lower dollar Swiss at 48. That is right here. Take profit at 78. Yeah, I was going to quickly look at Swiss pairs because the problem is, and I've been saying that already a few times, is that we are continuously banging our head on that 91.5 level again. You see, we broke through this channel a while ago, retested it, came back down, and now we are banging our head against the channel again. It's still positive. I mean, if you look at it overall, it's still very positive. But we need, we've been talking about it in our room yesterday as well. We are going to need a close above here. I don't see your 78, but you can see we have levels every 20, 25 points. But I still view it as positive. I don't see any reason why the Swiss should strengthen right now. And by the way, I was listening to what Jordan had to say today, which was absolutely nothing. The thing is, he's on his way out. But I think the market is always listening to what Jordan is saying, just in case, because we know how the S&P has been driving the Swiss franc, really. Just in case the S&P would start to say like, okay, the Swiss franc has corrected enough, the market has taken it far enough. For the time being, we are not getting these kind of signals, so the market is still feeling relatively okay to be short Swiss franc, and that we can see in the Euro Swiss, which is again coming to this 99.15, which to me is the gateway to parity. All right. Right, Ali, I spoke about the dollar yen, but I'll gladly give it back to Ryan for more comment if he needs. I'm done, Ryan, for today. Back over to you, my friend.
Yeah, thanks, mate. I am actually just taking a quick butcher's oil, which is having a little bit of a breakdown. Let's just share that quickly. Let's have a look at that. Yeah, I don't know what's. I haven't seen any headlines that drive for that. I don't know if it maybe the Putin headline has got some people going. I don't know, but we got a little bit of a break. We've been talking about this one. It was faffing around the 50 fib. We got resistance into the 80s. We had support down here, 76, 60s. And yeah, we're having a little bit of a breakdown. So just keep an eye on this traffic area, low around 76, 75, 80s. And then the 50 fib could be the last line in the sand for this rally before move all the way down there, which Biden will be happy with because that will mean lower gasoline prices for his election bid going in. We did hear that news that they were going to be releasing gasoline stocks over there to help with prices as well. So bit in part to that, but yeah, a little bit of a breakdown happening in oil. So keep an eye on that one. And I think we will call that a week this week. As always, thank you very much for supporting us here at the Flow Show with your presence. Don't forget to give us a little retweet now and again. We can get more eyeballs in here, get the conversation picking up as well. I hope you've all had a great week. Don't blow it all on a Friday. Watch that risk. Have a great weekend, everybody, and we'll see you all. Oh, we won't see you on Monday because it's bank holiday. We will see you on Tuesday. So have a good long weekend, and all you Yanks as well. We've got the long weekend too. So yeah. See you next week.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.